Peter Eliades with you. This is Thursday, April 2nd update for Stock Market Cycles. Hopefully a fairly quick update today. We've reached a point where, as the old ad said, the rubber hits the road. This is what we look like. Remember, we still have this higher projection up here, but we've come to the point now where it would rather easily be invalidated. And this is kind of a mock bar representing tomorrow, where it would be in terms of the horizontal movement. It would be right here. So a big down move tomorrow could at least initially invalidate, if not completely invalidate on a really big move down, this upside projection tomorrow. We told you earlier this week that we'd be relatively safe from an invalidation because you'd need to go back to the old lows in the first couple of days of this week in order to invalidate. That's no longer the case, as you see these offset lines moving up rather quickly, and tomorrow they'll be right here. These will be where the offset lines are. So, in fact, this is cute. You can do this. Let's take a quick look. We get kind of a sneak preview of what tomorrow's bar will look like, and all we have to do is bring up the futures trading overnight. And here they are right here. They're down about 17 or 18 points. But as you can see from the chart, there's nothing dramatic is happening. They need to go down a lot more than that in order to invalidate this upside projection. By the way, the upside projection on the futures is a narrower window, 27.95.95 to 28.39.65. So that's where we stand. This is kind of a sneak preview of tomorrow's prices. Obviously, it's going to be a lot bigger bar, either north or south of here tomorrow. These projections are suggesting it's going to be north of here. So let's go back to the S&P cash. Okay, here's the S&P cash again. And let's take a look at the next longer offset, because that will become important too going into tomorrow. Notice what's happening here. Now, again, we had you do this yesterday. Do it again today. Visualize this red line, 12.1 trading days, and the blue line, ideally 13.8. We've simplified it with being 14, offset 14 forward. But visualize this red line moving slowly forward. And as you can see, if that's the case, we have penetrated above it today, right around this level down here. Well, if I move the little indicator here down to around that level, right here, where it would be crossing, and we use this low and this crossing, then where the red line is would show you where the new projection, this is a nominal 5-week projection, would be. Notice where it is, just in the lower part of the projection that's already been generated. So if that happens, again, we go to the next longer offset, and that one shows us that we can get up to that projection, and there'll be no problems for the next week and a half, 2 weeks, in terms of getting higher projections. So if we get up here within a few days, then that will be the area that we'll look for a potential turn to the downside again. And by then, we would have had a decent A, B, C Elliott wave. I hate to use that expression. I have great respect for Elliott wave, but I'm not the guy to look for interpretations. But I mean, look quickly here. Here's the high on February 19th. 1, 2, 3, 4, 5. You can make a case there's 5 waves down, and we're doing an A, B, C. If that's the case, then we've got a big wave 3 coming up to the downside. So anyway, that's my amateur interpretation of Elliott wave. Please trust me, I am not an Elliotician. Okay, the only other thing we're going to show you is the NDX and how that interrelates to the offsets. So we'll show you that chart now. Okay, speaking of Elliott wave, by the way, before I forget, I mentioned Bob Proctor's updating of his book. The book title, which I neglected to give you yesterday, was Conquer the Crash. And Bob has updated the book to the present time. And I will put a link just below the video today for those of you that want to go to that link and are interested in ordering the book. I think it'll be well worth your while. Okay, this is 20-week offsets for nominal 40-week projections, and look what's happening. This projection remains in effect on the NDX, the Nasdaq 100. Now, it wouldn't take much, maybe 6, 7, 8%, as much as 10, to completely invalidate that projection. And 10% typically, going back 6 months or 8 months, would be a huge move in a short period of time. Not true anymore with the kind of volatility we've seen. So this remains very much in effect, this projection. And if we do rally and reach the objectives we showed you for the S&P, then this might be called into question. That'll be something that will be very important. Let's take one look at the next longer one that we've been looking at. This one, as a matter of fact, look what happened today. There's been a temporary move back above the lower of the two lines. So in order to do a full invalidation of projections, you would have to see that line, or the closing price, you would have to see it move above both of the offset lines. And if that were to happen, then this projection down here would be invalidated. You get a move back up here. Now, that's not that far to go up there. So the NDX is in a critical position here also. So the next few market days are going to be relatively important. And again, would remind you that we are now in a position where it would not be very difficult to invalidate those upside projections. I honestly don't think that will happen, but that's what I think. We don't go on what I think, folks. We go on what the projections show us. That's it for today. Thanks a lot for watching. Haven't subscribed yet? Bottom right of the screen, click on the little red banner. Click on the notification bell. You'll be notified. Give us some remarks, hopefully helpful remarks, constructive remarks that we've been of some help for you. If you have some criticism, let us know. And again, I will place the link for Bob Prechter's book just below the video today, so you can go to that link if you're interested. Thanks for watching.